So today I will explain auditing. So let's start with assurance and non-assurance engagements. So engagements may be classified into assurance and non-assurance engagements. So assurance engagements are further classified into assertion-based and direct reporting. For the assertion-based, you have audit, guided by the Philippine Standards on Auditing, review, guided by the Philippine Standards on Review Engagement, and the other assurance engagement guided by the Philippine Standards on Assurance Engagement. Then for the non-assurance, you have tax, compilation, advisory or consulting, agreed upon procedures, and others. And these are guided by the Philippine Standards on Related Services. What is an assurance engagement? So, an assurance engagement is an independent professional service that aims to improve information. An assurance engagement improves the quality of the information that is the subject matter of the engagement. Philippine Standards on Auditing 120 provides that assurance refers to the auditor's satisfaction as to the reliability of an assertion being made by one party for use by another party. Thus, the practitioner here, okay, who provides this assurance engagement lends credibility or enhances the credibility of the subject matter that is being distributed to various interested users. An assurance engagement has the following elements. An engagement must have the following elements to be considered an assurance engagement. Number one, a three-party relationship involving a practitioner, a responsible party, and intended users. The practitioner was outsourced by the entity to conduct an assurance engagement. Then, a responsible party who is responsible for the preparation of the subject matter, and intended users of the subject matter. Number two, an appropriate subject matter. Now, the subject matter may vary depending on the type of an audit. Later, we will discuss the different types of audits and the different subject matter for each type of audit. Suitable criteria. Let's say that the subject matter is the financial statements. Then the suitable criteria would be the applicable financial reporting framework. In the Philippines, we have the PFRS, which is the applicable financial reporting framework in the audit of financial statements for large and publicly accountable entities. PFRS for SMEs, for medium-sized entities, PFRS for small entities, and the Philippine Financial Reporting Framework for cooperatives, applicable to cooperatives. That is the suitable criteria in the audit of financial statements. Now, the suitable criteria may also vary depending, like I said, on the type of audit. The example I gave was for the audit of financial statements. Number four, sufficient appropriate audit evidences. These sufficient appropriate audit evidences are the basis of the auditor's conclusion. Okay? Number five, a written assurance report in the form appropriate to a reasonable assurance engagement or a limited assurance engagement. The output of the audit process, the assurance report. Now, these are the five elements of an assurance engagement, and this must be present in order for an engagement to be considered an assurance engagement. Here we have an illustration, okay, about the five elements of an assurance engagement. The responsible party here is responsible for the preparation of the subject matter. And the subject matter is prepared for intended users. The responsible party may be the engaging party or the one who engaged the practitioner to do an assurance engagement. Okay? Now, let's say this is audit of financial statements. The responsible party is the management because management is responsible for the preparation of financial statements. Responsible party, management, responsible for preparing the financial statements, which is the subject matter. And the financial statements are intended to be used or distributed to various interested users. The conceptual framework provides that users are classified into two, the primary users and the other users. Who are these primary users? You have those providers, okay, of capital. And who are these providers of capital? You have the current and prospective investors, and you have the creditors. Obviously, the investors and creditors provide capital to the entity. Okay? Then you have other users, a residual classification. You have the public, employees, government and their agencies, suppliers and trade creditors, and whatnot. They are what we know as other users. So primary and other users comprise intended users. So the responsible party is responsible for preparing the subject matter which are intended to be distributed, okay, to interested or intended users. Okay? Now, the practitioner here was engaged by the engaging party, who may be the responsible party, okay, or may be the intended users also. Okay? So the engaging party engaged the practitioner, okay, for an assurance engagement. Okay? So the practitioner here evaluates or measures whether the subject matter, okay, agree with the criteria. In the audit of financial statements, like I said, the subject matter is the financial statement. The criteria would be the applicable financial reporting framework. Okay? So the practitioner here, who is known as the auditor, evaluates or measures whether the financial statements agree, okay, with the applicable financial reporting framework. So that is the criteria. Okay? So the practitioner performs the engagement to the subject matter. The practitioner evaluates whether the subject matter agrees with the criteria. Okay? So the auditor gathers evidences to support his conclusions. And the end output of the assurance engagement would be an expression, okay, of a conclusion, and that is the assurance, which is intended to enhance the degree of confidence. The practitioner, okay, issues an opinion, and that opinion is being attached. In the case of auditing financial statements, the practitioner issues an opinion, and such opinion is attached to the financial statements. That opinion, okay, enhances the degree of confidence by users of the subject matter, the financial statements. Okay? So those users of financial statements, sasabihin yon. Okay? I can trust the financial statements produced by management because it has been audited. And that is the assurance. That is the degree of confidence being extended, okay, by the practitioner, okay, to the interested users or the intended users. Okay? Like I said, sabihin na intended users. Okay? Now, I am confident na yung financial statements nila ay tama kasi na-audit yan. It has been audited. Okay? And that is the confidence being provided by the practitioner. Okay? That is the assurance being provided by the practitioner. Just imagine if the management, okay, will just prepare the financial statements and distribute them to interested users or intended users. Yung iba dyan, hindi maniniwala na tama yung contents of the financial statements. Okay? That is why there is a practitioner whose intention, okay, or whose objective is to issue an opinion that is intended to enhance the degree of confidence of the intended users as to the subject matter. Okay? Let's recap yung five elements natin. Nandito ba? Ano yung 5 elements? The three-party relationship, appropriate subject matter, suitable criteria, sufficient appropriate audit evidence, and the report. Let's find it here. Let's have an example para simple. Anyway, the focus of this discussion would be audit of financial statements rin naman. Let's have that, okay? Let's apply that, okay, to this illustration. The responsible party here is the management who prepares the financial statements. Responsible for preparing the financial statements, which is the subject matter of audit. And that financial statements are for distribution to various users. Like I said, the primary and the other users. Huwag mong sabihing secondary. Okay? It's primary and other according to the conceptual framework. Now, the subject matter, ito na. The three-party relationship, responsible party, intended users, and the practitioner. Okay? Subject matter. The engaging party, responsible party, intended users may be the same persons depending on the assurance engagement or the type of assurance engagement. Okay? But for the audit of financial statements, okay? So usually, the intended users here, okay, especially if it's a financial statements prepared with GAAP, okay, the intended users here excludes obviously the management. Why? Because they have the easy access. They can access easily those financial statements. So they are not considered one of those intended users of financial statements. Because data or financial reports, financial statements are readily available, okay, to them. Usually, management are more interested about financial statements that is product of management accounting, okay, rather than produced by the financial accounting process. Okay, so intended users, the primary and other users. Primary, you have, like I said, the current and prospective investors, and then the creditors. Okay, and then other users, employees, public, government and their agencies, suppliers and trade creditors, and the others. Okay? Now, the practitioner here was outsourced to do an audit. Our example is audit of financial statements. To do an audit of financial statements. And what does the auditor do? The auditor evaluates or measures whether the subject matter is in agreement or agrees with the criteria in the case of audit of financial statements, applicable financial reporting framework. Okay? So the auditor performs procedures in order to gather evidences. Later, when the audit is done, okay, or shall we say known, because if it's not done until the auditor expresses a conclusion, okay, so if the auditor is already ready, okay, substantial performance na ng audit, okay, the output of the audit process would be the issuance or the expression of an opinion, okay, and that opinion enhances the degree of confidence. Confidence of whom? Intended users, okay, as to the preparation, okay, and content, okay, of the subject matter. The demand for assurance services arises from various reasons, including potential bias of information provider. Okay? Kasi yun yung example ko. Paano pag yung management who prepare the financial statements, diretso, bigay niya yun sa mga intended users. Sabihin ng ibang intended users, bakit ako maniniwala dito? Okay? Obviously, may bias. Sabihin ng user, may bias to. This must be audited. Yan. Diyan pumapasok si practitioner. Okay? Remoteness between information user and the information provider. Okay? Complexity of subject matter information. Expertise and independence of practitioner. Tayong mga practitioners are independent of the entity. Okay? Independent of our client. Okay? Audit client. Then risk management. Now let's proceed to auditing. According to the American Accounting Association, who provided us with the definition of accounting, yung definition of accounting is the process of identifying, measuring, and communicate economic information and permit informed judgment and decisions by users of information. Okay? So, the one who provided us with the definition of accounting, okay, also provides us with the definition of auditing. Auditing here is defined as a systematic process of objectively obtaining evidences regarding assertions about economic actions and events to ascertain the degree of correspondence between these assertions and establish criteria and communicating the results to interested users. So based on the definition provided by the AAA, the following concepts of auditing can be deduced. 1. An audit is a systematic process. Merong steps involved. Merong starting point. And merong product. Merong output. Step 1, Step 2, Step 3. In the risk-based audit approach, audit of financial statements consists of 3 phases. Phase 1, risk assessment. Phase 2, risk response. And the Phase 3, reporting. Number 2, an audit is conducted objectively. Number 3, the auditor obtains and evaluates evidences. Number 4, the evidence obtained and evaluated by the auditor concerns assertions. We will discuss later what are assertions about economic actions and events. Number 5, the auditor ascertains the degree of correspondence between assertions and established criteria. And number 6, the ultimate goal of the audit is to communicate its results to interested users. Types of audit. Subject matter, ito. Then the type of auditors. Then the entity and its objectives according to the COSO framework. Sabi ng Committee on Sponsoring Organization of the Treadway Commission, an entity has 3 objectives. Okay? So, 1, reliable reporting. Okay? Originally, that's reliable financial reporting. Next, effective and efficient operation. And the third, compliance with laws and regulation. Okay? Balik. Entity and its objectives. First, to produce reliable financial reports or reliable reports. Second, to have an effective and efficient operation. That's the other objective. And the third, to comply with laws and regulations. So, tatlo yung objective ng entities according to the COSO framework. Okay? Now, itong objectives, okay? The achievement of these objectives may require audit. Okay? Now, for the objective of reliable financial reporting, financial statement audit may be performed. And what will be the subject matter of that type of audit? Financial statements. And who may perform that? external auditor, governmental auditor, internal auditor, if that FS or financial reports or financial statements are for internal management use, then it can be performed by an internal auditor. Then, for the objective, effective, and efficient operation, operational audit may be performed. And the subject matter would be the operations. And who may perform that? Governmental auditor, internal auditor, and external auditor, if outsourced. Kasi itong governmental auditor may perform operational audit. Okay? For government only control corporations, government institutions, okay? Government agencies, doon sila. Okay? Common, usually, sa mga private entities, the one who performs operational audit are internal auditors. However, not all entities have internal audit department or internal auditors. That is why they outsource external auditors. Okay? They outsource the work of external auditors to perform operational audit. Okay? Now, compliance with laws and regulations. For this objective, a compliance audit may be performed. And who may perform that? Governmental auditor, internal auditor, and external auditor, if again due to outsourcing. Because governmental auditor are the one who audits, no? Government institutions or agencies. Compliance audit of private entities are performed by internal auditors. However, not all entities have internal audit departments or internal auditors. That is why they outsource the work of external auditor to do compliance auditing. So here, these are the objectives of an entity. These are the types of audit that may be performed related to each type of objective. And these are the auditors who may perform this type or each type of audit. Okay? If the subject matter, financial statements, that is FS audit, operational audit, and if the subject matter is compliance, that is compliance audit. And these are the type of auditors who may perform these types of audit. Audits according to subject matter: financial statement audit, operational audit, and compliance audit. Okay, what is a financial statement audit? This is an examination of the financial statements, okay, which is the subject matter, to determine if they present fairly the financial position, okay, performance, and cash flows of an entity in conformity with the applicable financial reporting framework. The auditor's opinion on the financial statements deals with whether the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. Operational or performance audits is a study of a specific unit or area of an entity for the purpose of measuring whether that unit has conducted its operations or performance efficiently and effectively, which is the subject matter. Effectiveness is a measure of whether an organization achieves its goals and objectives. Efficiency shows how well an organization uses its resources to achieve its goals. Then, compliance audit, an evaluation to determine whether an entity is following specific policies, procedures, rules, or regulations set out by some higher authority. So you have financial statement audit, operational or performance audits, and compliance audits. Audits according to auditor. You have external or independent audits, internal audits, and governmental or state audits. External or independent audits, these are performed by professional accountants in public practice who are independent of the entities whose assertions are the subject matter of the audit. Internal audits. Internal auditing, defined as independent, objective assurance and consult activity designed to add value and improve an organization's operations. Internal audit activities may include monitoring of internal control, examination of financial and operating information, review of economy, efficiency, and effectiveness of operating activities, including non-financial activities of an entity, and review of compliance with laws and regulations, and other external requirements, and with management policies and directives and other internal requirements. Then you have governmental or state audits. This involves the determination of whether government funds are being handled properly and in compliance with applicable laws and regulations, whether the government programs of a particular agency are conducted effectively and efficiently, and government units' financial statements are fairly presented. Governmental auditors may practically perform financial statement audit, operational audit, and compliance audit. Like I said, if this involves a government institution or agency.